Welcome to the debate. Today we're diving into the strategic future of SumTrix, the Reeland-based manufacturer known for its high-performance freestyle and touring skis and accessories. Now, over the past decade, SumTrix has grown significantly. Evolving from handcrafted prototypes to a company pulling in RSU $14.1 million in revenue and really carving out a niche in a market, let's face it, dominated by much larger players. The founders, they've explicitly expressed a strong desire to increase their share of the touring ski market, leveraging their considerable engineering expertise and, well, their burgeoning brand reputation.
Right, and that leads us directly to our central question for discussion today. Is SumTrix's current strong focus on expanding its touring ski market share truly the most strategically sound approach for maximizing its future growth and profitability? Or perhaps might there be other potentially more lucrative or strategically aligned segments within their existing operations that, frankly, warrant greater emphasis?
Exactly. So we'll explore two distinct viewpoints on this critical juncture for SumTrix. My perspective is that championing the continued intensified focus on touring skis is the right way forward.
And I'll be challenging that singular emphasis, proposing that alternative high-potential areas within their current setup actually deserve more strategic investment.
Okay, so from my perspective, the current strategic focus on the touring ski market is, well, undeniably the optimal path for SumTrix. Look, the company has a well-established expertise in crafting these high-performance skis. That's driven by the engineering backgrounds of its founders, Felix and Julian, and their unwavering commitment to the rider experience. The Rise of the Touring Ski Market article, it clearly outlines that this segment is experiencing robust growth. It's fueled by, a desire for adventure, a deep connection with nature, and a specific demand for lightweight yet strong and reliable gear for challenging off-piste conditions. And SumTrix's touring range was developed through extensive R&D precisely to meet these exact needs. So moreover, the founders' explicit commitment to increasing their share of this market aligns perfectly with their overall strategy to specialize where they can achieve substantial sales growth. Look at the numbers. The budgeted gross profit margins for the touring range, especially for advanced models like the Peak Master at 44.9%, they vividly demonstrate the segment's strong profitability potential as sales volumes continue to climb. This targeted focus lets SumTrix leverage its core strengths and mission rather than, say, diffusing efforts into less cohesive or lower margin areas like accessories, which only yield about a 31.4% gross profit margin. It seems pretty clear-cut.
That's certainly a compelling argument for scale and market alignment. I see that. But I approach this from a slightly different angle. While yes, acknowledging the demonstrable growth in the touring ski market, you can't ignore that a singular, intensified focus on this segment might just cause SumTrix to overlook other potentially more profitable and strategically aligned opportunities within its existing operations. Consider the custom ski segment, for instance. It exhibits the highest budgeted gross profit margin at, well, an impressive 50.7%.
50.7, okay.
Right? These skis are designed specifically for individual requirements. They're incredibly popular with professional and semi-professional riders, which indicates a high-value premium customer base that is clearly willing to pay, and pay well, for bespoke craftsmanship. So my concern is that by over-indexing on touring, SumTrix might actually be leaving significant value on the table elsewhere.
Okay.
And furthermore, look at the interview with Paris skier Lena Hofer. That highlights a significant, albeit perhaps niche, market for adaptive sports equipment. Now, this segment requires, and I quote, specialized equipment that is carefully made and finished to match each skier's individual needs. And importantly, it's noted as being more expensive, which suggests substantial profit potential. SumTrix already possesses a dedicated custom department, and its production process is described as largely handmade, making it, exceptionally well-suited to cater to such highly customized, high-margin demands. So diverting strategic emphasis to truly capitalize on these bespoke segments could, I argue, yield superior returns and reinforce SumTrix's reputation for innovation and quality, aligning perfectly with its mission to inspire riders and skiers to push boundaries in perhaps a different, maybe more impactful way than just chasing volume.
That's an interesting point about the per-unit profitability of custom skis and the potential of adaptive equipment. I grant you that. However, when we consider the broader strategic picture, the overall picture, it seems to overlook the sheer impact on total company profitability and growth. I mean, custom skis are budgeted for only 225 units. That's a tiny, tiny fraction of the 4,750 touring skis, or, look, the substantial 16,000 freestyle skis SumTrix expects to sell. So while the per-unit margin is certainly high, yes, the overall revenue and profit contribution from such a low-volume segment will always be inherently limited compared to the scalability offered by a growing market like touring skis. SumTrix needs to capture a much larger volume to significantly impact its, $14.036 million budgeted revenue. That's the key driver for overall growth, isn't it? So how do those low unit volumes for custom skis truly scale into significant company-wide impact, even with those impressive margins?
See, I find that assessment problematic precisely because it assumes a volume for a strategy is the right one for SumTrix. Let's remember, they're a smaller player with only about 2.8% market share in Europe. Focusing purely on volume in a competitive market that's dominated by 5 huge global brands commanding 75% market share in Europe, that is an incredibly challenging path. A real uphill battle. Instead, prioritizing high profit density products, like the custom skis, it maximizes return on existing capacity and specialized skills without directly challenging the giants on their own turf. And on your point about scalability, the Manufacturing First article actually highlights how 3D printing has also entered the supply chain, particularly in the prototyping phase. And it's even used, it says, for small-scale production runs of ski components, offering consumers tailored solutions. Couldn't this technological advancement significantly enhance the scalability and efficiency of custom offerings without forcing SumTrix into a mass-market approach where, let's be honest, larger players have overwhelming advantages in scale and distribution?
Well, 3D printing certainly offers fascinating possibilities, I agree. And it's a technology SumTrix should absolutely explore, no question. But we need to distinguish between what's technologically possible and what's strategically viable for overall company growth. I mean, sure, 3D printing can enhance small-scale production, but transforming a few hundred custom skis into a volume that meaningfully impacts our $15 million in revenue. That would require a massive shift in their operational model, their supply chain, even their customer acquisition strategy. Are customers truly ready to pay a premium for mass-customized skis at the volume needed for significant revenue, or does 3D printing maybe just make bespoke, niche production more efficient without fundamentally altering its market size? We're still talking about a highly individualized market here, not a mass one.
But isn't SumTrix already in the business of individualization to some extent? They've meticulously built their brand around rider experience first, for freestyle, right? And then they expanded into touring, developing these lightweight but strong and reliable skis.
Right.
That brand identity resonates strongly with adventure and performance in specific ski types. So broadening the primary strategic focus to more niche, custom, or adaptive segments, while valuable in its own right, I worry it could potentially dilute SumTrix's core messaging and specialized reputation. It could make it harder, maybe, to capture a larger share of that growing mainstream touring market, where their current brand clearly has traction. The mission, empowering freedom and creativity on the slopes and pushing boundaries, is, in my view, strongly associated with the high-performance aspects of freestyle and touring. Does a deep dive into adaptive equipment, for example, fit seamlessly into that established identity? That's the question.
I'd argue it absolutely does. Look, SumTrix already sells custom skis that are designed specifically for an individual skier and are popular with professional and semi-professional riders. This isn't some radical new direction. It's an existing facet of their brand and expertise. Expanding this to adaptive equipment, like Lena Hofer discussed, wouldn't dilute anything. I think it would enhance SumTrix's brand reputation for innovation, inclusivity, technical prowess.
It demonstrates a profound commitment to all skiers, embodying that spirit of pushing boundaries in a truly inspiring way. I mean, adaptive athletes, after all, profoundly embody that mission of inspiring riders and skiers to push boundaries.
That's a strong point on the branding side.
Right? So rather than diluting their brand, it strengthens their position as a high-quality bespoke manufacturer, not simply another volume player in a specific segment. It deepens the brand's meaning and could attract a really loyal, high-value customer base that resonates strongly with their core mission.
Okay, while the moral argument for inclusivity is compelling, and I agree, it aligns with the spirit of pushing boundaries, we do need to consider the practicalities, resource allocation, market risk. Concentrating R&D, production, marketing resources, all of it on the touring ski market allows for greater efficiency, deeper market penetration into a growing segment. Spreading resources too thinly across multiple niche segments, particularly one like adaptive skiing, which, let's be realistic, may require very different distribution channels, maybe specialized medical connections, that could be riskier and less efficient than capitalizing on a clearly identified growth market where SumTrix already has proven product market fit. The engineering backgrounds of Felix and Julian have been, quote, invaluable in creating the touring range. That indicates a significant proven investment and expertise in this specific area. To shift that focus significantly now would seem to undermine that established and frankly successful allocation.
My concern, though, is that focusing too narrowly on the touring market purely for the sake of volume efficiency might lead to an underutilization of existing specialized assets and personnel. SumTrix already has a dedicated custom department. They have a head of custom skis, Stefan Newman. That indicates existing specialized resources, infrastructure. So leveraging that department to expand into more complex custom orders, including adaptive equipment potentially, that seems like a more efficient utilization of current specialized assets and personnel. This strategy could actually mitigate risk, I think, by targeting high-margin segments that are maybe less susceptible to broad market fluctuations and the fierce competition from those dominant 5 global brands we talked about. And the Manufacturing First article, again, it supports this by noting that 3D printing can offer tailored solutions while reducing overproduction. That aligns perfectly with a bespoke, lower volume, higher margin strategy that maximizes existing specialized resources rather than just chasing volume in an intensely crowded market. Isn't it more prudent to, well, double down on what they already do exceptionally well and which yields significant profit per unit, especially when they have the infrastructure basically in place?
But does simply having a custom department, even a well-regarded one, automatically mean that expanding into a fundamentally different market like adaptive equipment is the most efficient path forward for overall company growth? I mean, the infrastructure for custom skis might not perfectly translate to the unique requirements of adaptive equipment. That can involve different materials, certifications, maybe even completely new design paradigms. While it leverages some existing expertise, sure, it could still demand significant new investment in areas where SumTrix doesn't have established market knowledge or distribution networks. In a capital-constrained environment, which, let's face it, most growing companies face, putting all the chips on a proven growing market like touring, where their expertise is fully aligned, that might just be the more fiscally responsible and strategically prudent move.
It allows them to gain critical mass before exploring these very specific high-touch niches. It's a classic build or buy dilemma, isn't it? Or maybe a focus versus diversify one?
It's certainly a nuanced balance, I agree. What I find particularly compelling in the custom approach, though, is the potential for SumTrix to differentiate itself even further, beyond just high performance in standard categories. The existing custom department already handles high-value clients, and the company's largely handmade production process is inherently geared towards that bespoke craftsmanship. Expanding that expertise, whether it's into more complex custom orders or adaptive solutions, it allows them to sort of control their own destiny, in a way that competing for volume in the touring market against global giants just doesn't. They can set their own price points for these highly specialized products, cultivate direct relationships with high-value customers, and truly embody their mission of pushing boundaries in a segment where their craftsmanship can really shine.
It could perhaps even serve as an R&D incubator for new technologies that later find their way into mainstream production.
Okay, so we've explored two pretty distinct perspectives on SumTrix's strategic focus today. My argument, to summarize, emphasizes the proven growth and the brand alignment of the touring ski market. That's where SumTrix can effectively leverage its engineering expertise and its established reputation to capture greater market share and ultimately overall profit. The clear investment in R&D and the identified demand in this growing segment present, I believe, a compelling case for continued focused expansion, really driving the company's top-line revenue.
And my perspective suggests a more nuanced approach, advocating for a stronger emphasis on the exceptionally high profitability of the custom ski segment and that significant potential for a high-value expansion into adaptive skiing. This aligns, I feel, profoundly with SumTrix's existing custom capabilities and its mission of pushing boundaries for all skiers. It potentially offers a more sustainable, perhaps less volume-dependent path to profitability and enhanced brand equity.
So ultimately, SumTrix faces a strategic decision. It requires careful consideration of scalability versus per-unit profitability, brand identity, and the optimal allocation of its specialized resources.
Absolutely. The material clearly shows the merits on both sides, focusing on expanding into the growing touring market and deepening the commitment to bespoke, high-margin custom solutions. There is certainly much to consider for SumTrix as it continues to grow and navigate the dynamic and very competitive ski industry.